In the world of finance, companies like Credit Acceptance are making waves with their resilient business models. Now, you might be wondering, what makes Credit Acceptance so special? Well, let's dive into that. Picture a financial services company that provides a lifeline for automobile dealers. Credit Acceptance offers financing programs that make it possible for these dealers to sell vehicles to consumers who might not be able to secure funds through traditional banking channels. Think of them as the bridge connecting eager dealers and potential buyers, creating opportunities where there might not have been any. Their business model is not just unique, but it's also highly profitable. They charge high interest rates to their customers, which has allowed them to consistently grow their earnings per share at a double-digit rate. Yes, there was a temporary halt during the pandemic, but that's understandable. After all, every business faced challenges during that time. But let's talk about the elephant in the room: inflation. The surge of inflation and the high interest rates implemented by the Fed have put pressure on the company's business, leading to a decrease in earnings per share. It's like a speed bump on a smoothly paved road. But here's the thing about speed bumps: they slow you down, but they don't stop you. And Credit Acceptance isn't stopping. In fact, they've been actively repurchasing their shares, reducing their share count by a whopping 45% over the last decade. It's a sign of confidence, a sign that they believe in their ability to weather the storm. Despite the challenges, Credit Acceptance is expected to recover and grow, making it a potentially lucrative option for long-term investors. So, while the road may have a few bumps, the journey could very well be worth it. But as with any investment, there are always risks to consider. Let's delve into the potential pitfalls that lie ahead for Credit Acceptance. The most significant risk for the company is persistent inflation. In a climate of rising prices, the Federal Reserve often resorts to increasing interest rates to keep inflation in check. Yet, these high interest rates could exert pressure on Credit Acceptance's customers, potentially impacting the company's bottom line. Now let's talk about another concern that has emerged in recent years. Credit Acceptance has displayed a slight underperformance in accurately forecasting its collection rates. This underperformance could be a sign of strain on the company's business model, especially if the trend continues in the future. Accurate forecasting is vital for the company to manage its risk properly and ensure sustained profitability. Looking ahead, analysts forecast flat earnings per share for Credit Acceptance in 2024, with growth expected to return in 2025. It's important to note, however, that these are merely projections, and actual results may vary based on a multitude of factors. So what does all of this mean for potential investors? Well, it's crucial to weigh the risks against the potential rewards. While there are undoubtedly some concerns surrounding Credit Acceptance, it's also essential to consider the company's current valuation. Despite the risks we've discussed, the company's stock is trading at what many consider to be a cheap valuation. This fact could limit the downside risk for investors, even in the face of persistent inflation or continued underperformance in collection rate forecasting. Despite these risks, the company's cheap valuation may limit the downside, making it an attractive prospect for patient investors. Moving from finance to fashion, luxury brands are evolving in response to the cryptocurrency revolution. It's a bold new world where style meets technology, and the fashion industry is taking note. Picture this: high-end brands, the likes of which grace the glossy pages of Vogue and Harper's Bazaar, embracing the cutting-edge world of cryptocurrency. It's happening, and it's happening fast. The LVMH group, the powerhouse behind labels like Louis Vuitton and Dior, has developed a blockchain called Eura. This isn't just a passing fad. Eura has a critical purpose. It's used to track and authenticate luxury goods, ensuring that customers are getting the real deal. No more knockoffs, no more fakes. Just pure, unadulterated luxury. But it doesn't stop there. Brands like Hublot and Frank Muller are not just tracking their goods with blockchain. They're accepting cryptocurrency as payment. Yes, you heard it right. You can now buy a Swiss luxury watch with Bitcoin or Ethereum. It's a whole new shopping experience, blurring the lines between luxury and technology. The influence of cryptocurrency extends beyond the tangible. It's not just about physical items anymore. Sotheby's, the prestigious auction house, has sold a Banksy painting for cryptocurrency. Luxury travel agent Travala.com is letting clients pay for travel experiences with digital currencies. It's a digital revolution, and it's transforming the way we buy, sell, and experience luxury. And let's not forget about non-fungible tokens, or NFTs. These digital assets are gaining traction in the luxury sector, with brands and artists creating unique, one-of-a-kind digital artworks and fashion pieces. They're not just collectibles. They're a statement, a new form of expressing individuality and style in the digital age. As the world goes digital, luxury brands are innovating to stay relevant and competitive. The fusion of fashion and technology is no longer a distant dream, it's our reality. And with the rise of cryptocurrency, it's a reality that's here to stay. In today's fast-paced world, staying informed is key. Today, we've delved into the financial turnaround of Credit Acceptance, a company that's demonstrated resilience and profitability despite challenging economic conditions. We've examined the risks, including inflation and high interest rates, which could put pressure on its customers. However, its attractive valuation and consistent share repurchasing initiatives underline its potential for long-term investors. Switching gears, we journeyed into the fashion industry, where luxury brands are embracing a new cryptocurrency revolution. From LVMH's blockchain, Aura, to the acceptance of cryptocurrency as payment by brands like Hublot and Frank Muller, the digital transformation is in full swing. The rise of non-fungible tokens and the potential for improved cost and data management through blockchain technology are exciting developments to watch. In these evolving landscapes, staying ahead of the curve is essential. By subscribing, you'll gain more insights into the world of finance and fashion. Remember, knowledge is power.